Hello there, you're watching the Week Ahead show here on IGTV, broadcasting from the heart of London as we wrap up a turbulent and historic week. The markets here in the British capital are back on track post-Brexit in what looks like the best week since 2011, as the weaker pound is proving to be an advantage for some, although the FTSE 100 is still down in euro and US dollar terms. Now, next week will no doubt be just as unpredictable, but to help you prepare, let's go through all of the numbers starting from Monday. So on Monday, we have got for you the Australia unemployment rate. There is an election going on over the weekend, so that will no doubt be eating up some headlines. Also, UK construction PMI as well, and US Independence Day. If you're celebrating that, be sure to have a good time. I've seen the movie, actually. It's very good indeed. No Will Smith, though. OK, Tuesday, moving on. We've got the RBA. We're actually going to discuss that in just a second or two. And we've got the Australia trade balance. Loads of PMI there from China, Japan, France, Germany, the EU and the UK, as well as the Eurozone retail sales and US factory orders too. Midweek, another busy day of it. We've got the Germany factory orders, again, PMI stats as well, this time from the retail sector, US trade balance, Canada trade balance too. We've got some oil numbers as well and the FOMC meeting. On Thursday, it's the Germany industrial production, France trade balance, UK industrial production, and we've got some initial jobless claims, very crucial. We will discuss that in a second, and the UK GDP estimate too. To finish off the week in economic terms, it's the trade balance from Germany, France industrial production, UK trade balance, Canada unemployment, and it's those non-farm payroll numbers. So some crucial numbers coming out of the US. OK, we've got Josh Mahoney right here who's going to help us analyse all of these numbers and explain exactly what they mean in the grand scheme of things. Should we start with the US then? Because we've got the initial jobless claims. Actually, quite a lot coming out of the US next week.
Yeah, definitely. And it's going to be quite refreshing to actually take our minds off the sort of political shambles that is the UK at the moment and try and turn our eye to actually some economic data, whether arguably it really makes that much of a difference at the moment remains to be seen, because of course at the moment everyone's just wondering about what the repercussions are of what's happening in the UK, and I think that's likely to really feed into what's happening from a monetary policy standpoint. But of course we've got first week of the month, means that we've got the jobless claims, we've got the non-farm payrolls, we've got the ADP, we've got everything coming out within 1 week seemingly, and therefore the US dollar basket is where I'm going to start off and look at exactly what's happening in terms of the dollar. Now of course we've seen this massive rally on Friday off the back of that sort of big move lower in terms of the likes of the euro and the pound, and really we've been sort of retracing some of that. Now you can see the moves here. This is the daily time frame, and this week largely has seen us move lower as of Tuesday. We did see a bounce yesterday, and that was largely in line with that speech from Mark Carney that pointed towards further easing within the UK. So we are retracing at the moment, but I wouldn't be surprised to see us come back on trend and start rallying once more. I do think we're likely to be coming into a more bullish time frame. If we look at the weekly, you can see here that actually we've got this rally coming into what we're seeing at the moment. And at the moment, what we're seeing looks like a sideways consolidation. It could lead, given the rally coming into it, to a break higher. So I think that we've bottomed out in this market, and I do think we're going to see further upside. Whether we see further retracement for the time being remains to be seen. If we do, then I think people will see that as an opportunity to get long. Nevertheless, I think whether it be by the end of next week or be by the end of that week after that, I think we're going to end up soon enough substantially higher than where we are at the moment in the US dollar index.
OK, let's talk about the UK, because obviously you mentioned Mark Carney just there. He's willing to pump in extra cash if needed. George Osborne, he's talking about the budget. He's not going to make it in 2020. We've got PMI stats coming out from the British economy next week. Yeah,
massive week. I mean, services PMI is the #1 reading that we're going to be looking for. But people are really going to be looking at what's the shift that we've seen. I mean, I guess as soon as we knew that Brexit was the announcement and that was the final result, everyone knew that there was going to be implications in terms of monetary policy. We didn't necessarily expect to see Mark Carney coming out within a week after that result and actually saying that we're going to be easing in some way within the summer. So that's a bit of a surprise. Now people are really going to keep trying to sort of hammer home that theme. I do think that people are going to continue to sort of sell on that news. And I guess the services PMI reading is going to be very interesting. It's expected to fall marginally. So whether we see a big move either way is going to dictate the state of play. But this is the weekly time frame on sterling. I guess it really shows you, on cable, sorry, it really shows you the steep decline, but also shows you how long it's been. Well, actually, we'd have to take it out to the monthly to show you how long it's been since we've been at these kind of levels. You can see here, 31-year low, and we've got this descending trend line towards the downside. That is currently around about 1.3. So if we manage to clear that out, then we could see the selling really ramp up quite heavily. But if we look in terms of the shorter term time frame, let's say the 4-hour chart, we can see that we are seeing, whilst we're seeing saw that sell-off yesterday, we're seeing a little bit of consolidation. I do think that that is likely to lead to another leg lower, and especially if you look at the hourly time frame, you can see that. So let me just zoom in so you can see a little bit more detail. You can see we got that stepped move higher, then the failure to take out that previous high, then sold off quite heavily. So the move that we're seeing at the moment, I see that as a retracement. So we could move up to say 1.34 kind of area, but I do think that subsequently we'll move lower. Next support level 132, and then below that sort of 131.20. So I do think the selling is just around the corner once more.
OK, let's talk about politics, but not UK politics this time, because in Australia we've got an election at the weekend that may feed into the economics next week. Malcolm Turnbull, he's considered to be the favourite in this one, and he's actually spoken about Brexit and said, let's go for stability, and also same-sex marriage. He's in favour of that as well. We've got the RBA decision on Tuesday. We've also got stats coming out from Australia as well. What do you expect from this one?
I think in terms of the presidential election, I think that largely it seems like a bit of a foregone conclusion, and that's why they held this new election. So I think Malcolm Turnbull will come into power once more, and the idea is that he's going to spend more, he's going to cut taxes, and people
Voters love that.
Yeah, exactly, brilliant. Yeah, and whether that's actually going to make a difference or not, I mean, it remains to be seen. But we have actually seen the Australian economy really moving away from the export, well, as much as they can, moving away from just being dependent on exports, hence really a little bit too reliant on China, and really trying to create that domestic consumption. We saw a very strong GDP recently, and that's why we didn't actually see them ease last time. So whether we actually see them ease this time, I guess really the big impact is going to be Brexit. Now, I don't think he's necessarily going to ease straight away. The residual impact that they're actually going to feel is going to be a little bit further away compared to the UK. It makes sense why you'd ease straight away in the UK. Wouldn't necessarily make sense to ease straight away in Australia. So I don't think they're necessarily going to ease over in Australia either. That should provide some sort of support. And if we look at the weekly time frame, we can actually see that Aussie dollar is seemingly turning around here. You can see this very clear downtrend, and within this downtrend you can see this is over multi-years that we're looking at here. It has been a long while since we've actually created higher highs and higher lows. Now you can see we broke out of this key resistance point 73.90, created this new high, sold off, and then seemingly created this new higher low, and now we're pushing higher as a result. So if we look at the shorter time frame, the daily, you can see here that we have sold off heavily earlier in the week, or back in the last week and on Monday. But crucially, you can see that it didn't take out this previous low. We've got a very deep retracement and it's rallying once more. So I do expect to see further upside. I think we're going to see Malcolm Turnbull come in, which largely is a stability play anyway. And then I think it's likely that we're going to see the RBA actually stay put. And then I think that should be good for the Aussie dollar. So I think we shall see some upside for the Australian dollar to get over the sort of jitters that we saw at the back end of last week and beginning of this, off the back of that Brexit announcement.
And it's so interesting how Brexit ricochets all the way down under, doesn't it?
Yeah, definitely.
I mean, it's such a domino effect. It's been absolutely huge. Let's move on and talk about the corporates, because next week it's all about the home builders and the infrastructure companies, which of course are very open to Brexit as well. So let's go through, starting on Monday. We've got Kier Group there. It's a leading property, residential and construction services group. On Tuesday, it's slightly busier as well. As I say, lots of home builders there. Persimmon, we will analyse in just a moment. And we've got the iron ore company there, Ferrexpo. It's a Swiss headquartered iron ore company with assets in Ukraine. On Wednesday, Carillion, one of Britain's leading infrastructure firms, built such things as Liverpool FC's expansion there, the Anfield expansion. Moving on Thursday, We've got Sports Direct there, I'm sure you've heard of there. It's a huge sports company there. Associated British Foods, which we will dissect in just a moment as well. And again, Great Portland Estate. So as I say, lots of property companies, and Marks and Spencer's as well. Sentiment as well, the gold company, which we will analyse too. Josh Mahoney is still here with me. And so where should we start then? Well, I suppose let's go for the home builders, because this was always threatened if there was going to be a Brexit. Largely, nobody thought that there was going to be, but really they've taken an absolute battering, down about 40% as a whole. Yeah,
you can see across the industry, lots of them hit around about 40, 50% down. I don't think that necessarily makes sense. I think, can you imagine, a company losing 50% of its value overnight? Now, yes, I think that the UK housing sector is likely to take a hit. How much remains to be seen. But if we could be talking about it coming off, I don't know, 3% or something in a year, as a number that's been touted about, I don't think that necessarily should devalue this company by 50%. The problem is that it's all about whether people are actually going to stop their investment decisions, and you're hearing that quite a lot.
That there's some, you're
hearing that quite a lot about people that are cancelling some of their contracts and the like. So certainly, I think they will take a hit. But you can see here, and this is the weekly time frame. Yes, the wider market has certainly responded quite heavily and started rallying, and that's why we're seeing some upside. But at the same time, you can see that we have seen this very long lower wick on this recent candle on the weekly, and that shows you that people are starting to buy it up again. You can see that 1175 support level, previous support here, sort of around about mid 2014. If we look at the shorter time frame, the daily, you can see that we have seen some gains, but we're still a way away from where we were previously. If I got the measuring tool here, you can see we're around 28% lower. So I do think we've got further upside to come. I certainly don't think we should be in the same position that we were at the back end of last week or prior to that actual vote. So I do think we've got further upside to come. I think people are seeing this as relatively cheap, hence we're seeing the buying that's coming in at the moment. Nonetheless, I don't think it's necessarily going to reach the heights that we saw previously, and there is some reason behind this sell-off and the fact that it's being pretty bad. And certainly when you see the likes of the FTSE turn around, we've obviously been seeing it rally pretty much all week. Once it does turn around, you'd be thinking that some of the home builders really are going to be the ones that are taking the hit. Those and the banks and the travel companies generally have been the ones that have been sold into.
And Asian buyers are coming in thick and fast, aren't they? We know that they like their London properties, and first-time buyers, it's a great opportunity, obviously. Let's talk about Associated British Foods, because this is a really interesting company because it's very diverse, isn't it? We're talking sugar, agriculture, but also Primark, which makes up 60% of this company. It's the real steam engine behind it, isn't it?
Yeah, definitely. And they've invested a lot recently, so that's going to take a hit. But ultimately, it is a very solid brand. And when you're talking about the idea that we could go into a recession, well, that's one company that generally people always piggyback onto and think, when there's a recession, everyone heads off to Primark to get their clothes. So you would think that that's well shaped for the future. And alongside that, we've seen sugar prices rising massively recently, and that really is sort of yet to feed into some of the valuations and some of the earnings. So when it comes out, I would expect to see significant gains off the back of that, and I think people are going to really see that as a good opportunity because of that. So you can see here in terms of the share price, again, weekly time frame shows you back end of last week we saw initially very sharp sell-off, that recovered, same kind of thing this time, came into 2407 support and has held up. So for the time being, we have somewhat of a sort of broadening formation here. And as such, I think that we've got further gains to come. If we look at the daily time frame, you can see here we haven't taken out this 29.19. I would say that I would need to see that for me to think that the worst is over and that we were going to see a bit more confidence coming back into this. Yes, we're seeing a rally, but for the time being, it looks like a retracement of that sell-off that we've seen. Nevertheless, from a fundamental standpoint, I think it makes sense that the earnings should be good. But of course, it's anyone's guess how they're going to come out. But if we manage to break back above 29.19, then that is going to be really crucial. And that should pave the way for us to actually get onto a more stable footing and get the buyers back in for what I think is going to be a good company for the future.
Yeah, things are looking really sweet for that company, it must be said. Anyway, let's talk about sentiment as well, because this company is very sweet right now because gold has been gaining, and this company has been gaining about 40% this quarter.
Yeah, it's been doing brilliantly, and ultimately, if you're looking at where where's your money going to go into nowadays in such a sort of risky environment? People are getting back into, you know, the FTSE and the like.
The yen.
Yeah, well, the yen, you have the problem of potential devaluation down the line. That's why people are moving towards the US dollar, because I don't think that their monetary policy is going to be moved massively. Okay, they might push it back a little bit, but ultimately, you know, people always were quite sceptical about how many rate rises they were going to do in the near term anyway. And so you're seeing people really move into the likes of gold, and people thinking about Bitcoin and things like that as a way to sort of, certainly within the UK, sort of stave off the threat that is the devaluation of the currency that we're all earning in, and we have our savings in, and we have our houses in and everything. So I think people are moving into these safe havens. I think gold is set up for a very strong second half of the year. There's a lot of risks. There's the risks associated with the presidential election in the US and what that's going to do for, you know, the need or the want of people to actually hold US dollars. So that threatens the US dollar later into the year. I think gold, silver, Bitcoin, I think they're going to really come into prominence, and as such, you know, right now sentiment looks like it's relatively expensive because it keeps pushing higher and higher, but much like gold, I think that this is actually the beginning of the story. I think we're going to see significant gains. You can see historically we've certainly been higher than we are at the moment, so the next resistance points, if I put a few of those on, you can see 143, 159 and 202.
All right, Josh, let's just, we're still in post-Brexit era, aren't we? And it's still very volatile, very uncertain.
Or are we in pre-Brexit era?
Oh,
we haven't enacted it yet.
You're right. We haven't, have we?
Brexited, no.
So it's all very uncertain, isn't it? So,
Yeah.
So how is next week going to play out then? I mean, what can we hope for? Because, as we say, we've seen a rally in terms of the FTSE. Certainly
Yeah.
wasn't expecting that had we have had this conversation last Friday.
No, definitely not. And it's caught most people by surprise. Now, certainly when you're looking back at it and you're trying to justify it, you know, everyone's saying, oh, well, actually, you know, sterling's cheap, and there's a lot of companies within the FTSE 100 that actually earn abroad and can repatriate that money, and therefore it's doing well for them. And, you know, and that's why you're probably better off shorting the FTSE 250 going long the FTSE 100. Certainly, if you're looking at the DAX, that's not necessarily going to be in a good way, and you've been seeing the recovery in the DAX doesn't really compare to what we've been seeing in the FTSE, and that's largely because of the fact that, you know, this whole story, this whole Brexit story has been sold on a number of fronts, but one of the key ones is immigration. And seemingly, if we're going to do a deal with the EU, you've got a double-sided coin, really. You know, you either want to have free movement of labour, you can either have free movement of labour, or you can have these trade deals. You can't necessarily have it both ways. And if they're going to actually pull back on the free movement of labour, which it seems would have to be the case because so many people have voted on it, what's that going to do for trade deals? And for Germany, they would be massively hit because we're a big recipient of German goods. So that's why I think that the Germans are really getting hit more than the likes of the FTSE 100. It's going to be very interesting to see the continued repercussions of what's happening from a monetary policy standpoint, whether people continue to buy off the idea that, you know, we're going to see easing soon. And yet again, same kind of thing in terms of weakness for sterling, weakness in terms of euro. So a lot to look forward to. And it's going to be interesting to see what's happening in terms of these events because, you know, largely in the last week, everyone's just shrugged off anything that comes their way because they're only thinking about risk sentiment and the repercussions of a Brexit. But now this week we actually have some really big hitters in terms of the economic announcements, so it'll be interesting to see whether they actually make any sort of difference in terms of monetary policy outlook.
Josh Mahoney, thanks very much.
Pleasure.
Thank you as well for watching, and we will be back on Monday at 7:30 a.m. We will have Mike Ingram in the studio, and it'll be Jeremy, as usual, taking you through the market open here on IG. In the meantime, have a fantastic weekend. Goodbye.